Good morning, everybody. This is Chrisi from SolsticeATR. I will be covering for September 23rd and up or September 22nd the weekly outlook that will be happening in the market. First of all, what I'd like to say, be careful out there due to three major factors. The Federal Reserve Board had decreased the interest rates by a quarter on Wednesday. Two is the BREXIT exit. Three, which is the major one that I am afraid of, is the tariff war between us and China. Because on Friday they were supposed to have met regarding the agriculture and they decided, hey, let's go back home without having a meeting. It caused a reaction in the market to the downside. So they sold really in the afternoon the market before the close. But the value area or the POC never shifted lower on the Fortune 500. Let's start first of all by looking at the SPX, the NASDAQ, the Russell, and the Dow Jones Industrial Average. If you noticed, we were consolidating inside the prior range of the week before, and this was the weekly candle, which came in a little bit and came in negative for the week, 254 points down. Let's take a look at it on the daily chart. And the daily chart, basically, this was basically consolidation looking to go up, and eventually we fell through on Friday. We closed below the 39,300, which is a critical area. This is a box basically in consolidation. We have not came into the 18 SMA or the 50 SMA. And I would draw a channel here a little bit more tighter. If we fall through it, be careful if we come back down and revisit the 50 SMA or the 20 on the weekly chart, because I am afraid of it not continuing higher. If this is going to be the cup and this is the handle to continue, that would be great because of this consolidation. But if I look at it, we didn't meet the prior high. We got to it and we couldn't get down and we fell inside this box. Let's break down each instrument one by one. We'll take a look at the ES, which is the E-mini S&P 500. And from there we can figure out what we can do. If you notice, we were in consolidation in this area looking to go up. We had a doji on Thursday. Friday we fell through, and I'm afraid of losing this channel here. I had it drawn before, and we have an up channel, a midpoint which is no longer valid. This channel is no longer valid, but I would keep that one up here, and I would keep an eye on the 29.75 to stay bullish, because the 92 is a very critical area. We did close on Friday below the 29.88. 29.92 is my line in the sand for bulls to keep. If this is going to continue, I hope it U-turns and goes back up. If it falls, my first target would be the 50 SMA, not the 18, and the 38.2 before we do anything in the 50%. I'm not trying to be bearish, but what I'm going to do is break down the volume profile for you in very detailed on the S&P 500 to give you a better idea where we can go from on that. Let's take a look at the NASDAQ slash NQ. Oops, slash NQ. Okay, the NASDAQ 100 is basically never was a little bit lower. If you draw a channel, we can take this one out, no longer valid. Remove drawing, and we can take one from this high to this one and draw it to show everybody that we're still in a down channel on the NASDAQ 100, because some of the NASDAQ 100 are not participating. We had on, why isn't it letting me do that? Okay, here we go. Take it to this one. Perfect. So as long as we're below this channel, keep an eye on it. We're in symmetrical triangle. If we lose this down channel here, we have one here. But I would keep an eye on this one. That would be the first target. If we come back up, that would be great. Let's take a look at the Russell, RTY. The RTY basically on the daily chart tried to break out above the channel, looked above and failed, and came back in. Is this the shoulder Is this the head and we're creating a shoulder to go back up and continue higher? We revisited this area, had the oval. My concern is this: can the Russell hold this area without falling back to the 38.2 and continue up? This is, remember, the canary in the coal mine. What I would do is grab a line here, this channel here, to this candle here, and keep an eye on the up channel. And you have one basically from this candle here to this candle here. We are in a cone looking to the upside, but you have this channel, the longer time frame, downtrending. If I show it to you on a weekly, it's more visible what we did. We looked up into it because we had this minor channel, looked up and closed. This is bullish on the weekly chart because you're trying to break out to this area here where we fell through. So let's keep an eye on the Russell. Let's go look at the Dow slash YM. The Dow is basically a little similar to the S&P 500. We're going to go look at the daily. It created that POC, came down. We missed that over. Remember, I had it. We looked almost into it, and we eventually, excuse me, on Thursday, Friday, we fell through because of the consolidation. That was basically the POC area here, the 27, 640 area to 50 area, and we fell through. If the 18 SMA gonna hold us, we're gonna keep an eye on it. And what we do, we grab this candle here to this one here. It's a little too tight. And what I'll do, I'll just do it like this. See, it's a little further, but what I'll do, I'll keep an eye on it on the Friday candle. If it falls through, we come back to the 50 SMA where we broke out of first. Let's take a look at gold GC. Remember, the fear gauge has came back in from that 1550, 1560, I mean 1555. We fell down to the 92. The 1508 area has been very critical because remember, I said the 1508.6 was my line in the set of this consolidation. We went up, created a POC. This is a new POC at the 5 area, holding on. If this is going to fall through, you got to keep an eye on it. If it falls through and loses the 50 SMA, so far on the daily chart, the 50 SMA is consolidating. I had this oval. I was really looking to come back in this area where we broke out of to get a nice long, but unfortunately it didn't make it. Now it's pushing back up. Remember, the fear gauge has just started to come back up. You need to make sure there's confirmation at the 38.2, clear the 50 to the 61. If it doesn't clear it, it comes back in because that 1505 area is very critical. 1508.6 is my line in the sand. Keep an eye on it. See what next week gold does. Let's take a look at oil. CL, we had a nice reaction this week in oil to the upside and back to the downside over the weekend because the Saudis, because of Iran, they had launched a missile of some droid that hit the product, dragged oil up, and it fell through. And we really had a nice push back down consolidation. Ended up consolidating right at the 38.2. The 58.60 area is very critical. In order to break out, you have to keep an eye on 59.65 and above in order to continue up. We did not fill 100% of this gap. You see it still, there's that gap from the noise that happened overseas and international that we're thinking we will go to war. As long as we're above the 57.40 area, I think it is okay for oil, may consolidate to continue higher and eventually get back to this area here, which I had the oval, which will mark it here this week in the coming charts. So, because remember, we had a lot of POCs. This is a POC, this is a POC, this is a POC. We're still holding and they were grinding higher to the upside. And if you look, you can draw a channel here this way. And this way, we're in the symmetrical triangle. As long as we don't fill this gap, we continue higher. Let's take a look at um, let's start with Apple. Where is this noise coming from? outside some kind of noise on the train. That's interesting. Apple looked above the 221 area in 50 cents, 37 cents here, and eventually tried to look up, and eventually Thursday, Friday fell through. Remember, the tariff, what is it going to cause? Three things that in December that Donald Trump is going to do on $160 billion goods. Instead of being 25%, the tariff is going to increase it to 30. Part of it is computer, laptops, cell phones, three consumer goods. So those three things will cause Apple to retrace. Keep an eye on the tariff. I think this is the major one. I know the Federal Reserve Board had decreased a quarter point. I do repeat myself to keep an eye on it. So is Apple's gonna retrace and lose this channel in here and lose the 18 SMA. Apple won't have a chance till it gets to the 61.8. This was the first prior breakout. If you notice between here and here, when we broke out, there was that little tiny gap between this candle and this candle that kept us going higher. The first thing would be that gap and the 38, the 50% fib and the 50 SMA. That's Apple. Let's take a look at Amazon. Oops, AMZN. Amazon, I'm looking at it in a little different format than a lot of guys will look into it because it was, consolidating, going up, and eventually fell through. It stayed between the 1845, 1850, and the low was, let's call it 1750. So this consolidation, if 1775 in Amazon does not hold on the daily, you have a 200 SMA that will be lost. I think the distance between here and here, or this box that is created, the breakout would be above the 50 to come back to fill that gap. That would be 100% retracement. If it falls down, there won't be anything till the gap down here, which will lose the 1672, and it will come back to the consolidation where the puck was in this area, the 1630, 1645 area would be a nice reset on Amazon. So you can trade on a breakdown below this 1775 to the downside. That's your 200 SMA. We'll zoom in one more time so you guys can see it. So Amazon has the 200 SMA right here at 74, 73. If it falls through the 75, look for the downside of 1645, so it travels the same distance. But remember, you have this down channel here. If you can what you want to do is just draw a down channel like this. Just grab it, see if it holds this area, which is the oval. If not, you'll travel the whole distance down. If it breaks above the 35, 36 area, look to travel back to the upside up here around the 1940 to partial the 1950 to fill partial gap in here. Let's take a look at BABA. A lot of people are not looking at BABA, but it has really moved back up a little bit. Remember, it did the wicked, this is if you call it that, but this was, I couldn't consider this a head or double head or shoulder and a head. This was more of a smaller move, consolidated, and eventually on Friday popped up. If Bob is going to continue, it has to clear this puck here in that consolidation to reach the prior high. If it falls through this channel or the 18 SMA, look for the 38.2 to continue higher. That's BABA. Let's take a look at Facebook. Facebook was making a nice rounded bottom. It did a nice rounded bottom. Friday fell through, closed right around the 50 SMA. I was looking for the 61.8 and only reached the 50% fib, still in chop face. I don't have anything. If it goes below the 186.20 would be danger zone for Facebook. It'll basically fall back to the support area. If it breaks up, look for the 61.8 in this area, the consolidation where the POC is around, the 202 area. Let's take a look at Google. Google did a nice rounded bottom, but on Friday, if you notice, Google, when it was trying to push up, it consolidated and fell through the Thursday's high and closed right underneath it. The puck area on Google, which is very important area, the 1225 area should be important. If you end up losing it, look for the 18 and the 50 SMA before continuing high, because this was the consolidation before the breakup. It's going sideways, building, you know, some kind of a move either to break up or break down. Keep an eye on what the market gives us. Let's take a look at Netflix and Nflx. Netflix is a little bit weaker and everybody's looking at it on the weekly. I am aware of it. The weekly looks a little bit more weak. It can continue a little lower before coming back up. If we take a look at the weekly, since it fell through, if you draw a channel up here, it fell through it. This was the consolidation. Every time it touched this area, bounced back up, it fell through. If it's looking for the backside of this channel, I would keep an eye on the 250 to 245 area. If it holds, this was the prior consolidation before the takeoff here, and this was the prior breakout. Everybody's looking in this area here. I don't think it is. If it comes back, that would be between the 250 to 245. Look for a U-turn coming back up, making this a nice rounded bottom. This will make it like an H-band. Let's call this the head. This is the, the 8 and eventually break up. If Netflix turns, be careful because it fell through the 278 area. That's a very important area that I did not want to see Netflix fall through the 288, 278 area, and it actually fell through and couldn't continue because this is the weekly chart. If you look at the daily chart on it, it's a little different on the daily chart. And what the daily chart did, it kind of created a rounded bottom and eventually Wednesday, Thursday, Friday, gapped down and fell through. So what I would do is grab this candle here to this candle here. This may be a wedge, okay, everybody? This may be a wedge that nobody's looking at, okay? So keep an eye if something happens to the bull side and they end up doing something totally different and nobody's looking at it. And this is the down channel on Netflix. Oops. Why isn't it giving me this? Come on. There we go. There we go. So this is the channel. This fell through it. So it's no longer valid. Remove it. And let's see what Netflix does next week. Let's go look at Tesla. Tesla was, coming up. I said this over, look for the breakout. It went up. It consolidated, was making a nice rounded bottom. And eventually on Friday fell through. The 245 area 50 is very important in Tesla to see if it comes back above and continue. If it falls, look for the 38.250 fib and eventually the 61.8 where it came out of this area before continuing higher. Because if you travel the distance on this consolidation, breakup is up here, breakdown is down here. So these are the two things we can look at. Tesla. Let's do one ExxonMobil. XOM. XOM. Here we go. Exxon, because of the Iran, they pushed it up and they dragged it back where it broke out of, it filled the gap. If 70 area and 80 holds, look for a U-turn. If not, the 61.8 would be the second area where you can come back. I'm thinking 70, 60 to 72, 70, 60 to 70. 50 should hold in order to continue higher. Let's go back to the ES, and what I'd like to do is break it down in a little bit more detail for you guys to give you a better idea what I'm looking for. We're going to go from the daily. I'm going to use an hourly chart to give you a better reference on what we're going to look for. I'm using a 78-minute, and there's a reason behind it. The 78-minute, remember the futures do not close at 4 o'clock, they close at 4:15. This is why the time frame, instead of being a 1-hour chart, it's a 78-minute chart. Let's go down a little bit further out. We're going to start from this area where we broke out of and take a look at it. If you notice, we consolidated here. We looked a little bit lower to the prior breakout, tested it, pushed up, came back in, retested the prior breakout here, consolidated, broke up, and we came back down on Friday. If I take a look at this area here to here, what I want to show you guys, remember, where most institutions think that there is value between value area high, value area low, and a midpoint, or they call it a POC. These are the POCs. This is the yellow dash line that I have. This is another POC. This is another POC. This was in the overnight. And we had another POC up here. And eventually on Friday, we were basically range bound here for 3 days, closing in the same area. We looked up, went to the 30-20, 30-25 area. Then on Friday, we were consolidating in this area around the 305, and eventually, because of that news, we fell through, tried to come back to the 305 where most of the consolidation was, and they sold it into strength. If this strength is going to be the weak link in the market because of what's going on with China and United States, because if they didn't decide to meet, be careful being long. If they do work this out and the Federal Reserve Board next month sees that they don't have to do anything with interest rates, they have a 50-50 balance, it may go back up and the market will continue higher, because we were bullish until that news came out on Friday of them not meeting the agriculture before they going back to their country. So this was the reaction that was caused on Friday. If we end up staying below the 29.92, 29.88, where the scenario is bullish, I have this dash line here. You see it? This is very important. We came back, retested this breakout. We overnight pushed up. Where did we stop? We came back to it, but we didn't come back to this one, which was 82, I believe, or 29.8075, because this was a market reaction on the noise on Wednesday because of the Federal Reserve Board decreasing interest rates. Everybody said everything looks good. They're going to be supporting the market. Everybody brought that support area where the POC was and took off again. So that 82 is very critical in the coming week if we're going to continue or not. And we have to stay above the 88.92 area. If we fall through it, there's not much we can do, but remember, there's a lot of manipulation and price action. Keep humble and keep everything simpler and break down. Don't be biased to one side. Trade what you see, not what you think. What I'm going to do is basically go to a 15-minute chart, and I'm going to change the style to show you the consolidation in the monkey bars. We go to monkey bars. I know this video was a little long than I expected. I hope you guys are okay with it. It doesn't make you feel uncomfortable. This is a 30-minute chart. We're going to take it down to a 15-minute chart and a little longer time frame. If we can do 5 days, 15 minutes, or 10 days, let's go 78 minutes. One moment. Okay, can we do this? Yes, it does. Okay. If you noticed, this was the coming down where the POCs were developing, POC developing, POC developed consolidation. Then where was the middle? Around the 3005 area. We consolidated and looked up and continued higher. But on Friday, the POC never shifted lower. It stayed higher. We got two different distributions here, one up here and one down here. What we can do is bring it down to a little faster time frame where you guys can see it. See, this is where the POC is. The 3005 was basically 3010, the major area was. What did they do on Friday? This is the value area high, value area where there was the developing. This was the POC. What did they do? They have a gap between this area, the 305, and the 302 area, where we were consolidating in this range here before we broke up. all of a sudden we got one distribution, two distribution. Where did we close? Lower. But where is the POC? Right here, that box. So what I would look, keep an eye on this gap if we're going to come back up and continue. And if we end up losing the 82, 80 area, which is this area here, we're going to continue lower. But if we consolidate and clear the 92, the 88 area, look for the upside, see what it does on Friday. That Friday action, remember, what did it do? Come back up, tested 305 and fall through back down, and they close lower, getting everybody out of the market because they want them to be short. What about Monday? They do the opposite. So good luck for everybody. Hope to see you at Solstice ATR or Vulcan Capital Research. Make sure to subscribe on this video. At the bottom of the link, there's a link on YouTube. It's free for you. And look us up. Take care and look forward to seeing you.